All right, guys, you're welcome. How you all doing? Let's go, let's go, let's go. Mm, morning, everybody. You're welcome. Let's get started. Mm. Good morning, everybody. Let's go, let's go, let's go, let's go. Let me see. All right. Good morning, good morning, good morning to you, wherever you're watching from. Let's get ready. We're going to be taking some trades between now and New York section. So get ready. We're going to be taking some trades between now and New York section. So if you're watching us on YouTube, Facebook, if you're on Facebook, I will advise you to come over to YouTube and hit the subscribe button there, because every week we have videos that we put up on YouTube for you, analysis of the week. So you can take advantage of that on YouTube. If you are on the Facebook watching, so I will encourage you to look for us on YouTube right now. Just look for Trader Cbrown YouTube. You'll be able to find me and subscribe to the channel. All right. So today we're going to be looking at a lot of pairs. So I want you to pay attention why we look at the pairs, and also you can ask questions in the comment section. Ask your questions, and I'll be able to hopefully be able to answer all of the questions that will be coming in today. So get ready for that as well. And also we'll look at some platforms that you can begin to use for your advantage. So get ready for that as well. Let's share the link. Let's share the link. Share the video. Let's invite other people to come quickly so we can get started. Let's go. Let's go. Let's go. So we're going to be looking at some pairs today. These are the pairs we're going to be looking to trade. So get ready. Get ready, get ready, get ready. These are massive sale that happened this early morning at about 5 o'clock, 6 a.m. The market started dropping. So giving us opportunity for a continuation to sell this market. All of these pairs we're going to be selling, most of them. That gives us the opportunity to beautiful setups. So New York section is going to be really interesting. So being the last day, today will be my last trading day for the week 13. So I personally am looking for opportunities that we can take advantage of. So you are ready, right? This one is the first to begin to get ready as well. So I'm going to answer some questions. If you have questions, please endeavor to ask your questions, and we'll be able to, hopefully we'll be able to take your questions in the comment section. Put in your questions in, and I will just talk you through on a strategy that I will advise you to start using for those of you day traders. Now, remember market structure. If you haven't watched my video on market structure, I will encourage you to go watch the video on market structure. We talk about a break, a push up, which is an impulsive move, and then price breaking the previous high, and this is called uptrend. We call this an uptrend move. Let me as you can see that now. So we call this uptrend. Okay, this is an uptrend move. This is structure here. Structure. Okay, structure. That's when the market changes direction. Structure. You see, that is called structure. So we call this break of structure to the upside. Break of structure. It's called break of structure. The market changes direction to the upside. So we have this uptrend, you see, as defined as uptrend. All right, that's defined as uptrend. So firstly, you want to see a structure in the market. So once you see the structure, now depending on the time frame that you are on, I would suggest understand the different time frame. Do you trade as a day trader? What time frame do you stay on to trade as a day trader? And if you are a swing trader, what time frame do you stay on as a swing trader? I'm not sure why the thing is so dark. I have my light on. So yeah, a swing trader, you got to know. But as a day trader, your time frame will be within 4 hour, 1 hour, and 15 minutes. So you're looking at these three time frames, and you can choose to have just two time frames. Like you can choose to have 4 hour and 1 hour as your entry. You can choose to have the three. You can choose to have 1 hour and 15 minutes as your entry. So depending on what the market, how your strategy, your system work, and you'll be able to put in those time frames. So as a day trader, your time frame will be 4 hour, 1 hour, and 15 minutes time frame. That means anything lower than 4 hour is what you focus on, but not to have too many distractions. We advise you to stick with maybe 2 or 3 maximum time frame. That will help you narrow down, and then all you need to do is to understand the overall movement of the market, and then from that you'll be able to move quickly into a lower time frame where you can have an entry, and then you begin to move in that direction. So this is an uptrend structure, and a downtrend is just a flip of that. So you have a downtrend where you have price drop and then pull back up into a structure and then drop again. All right, and then pull back up into a structure and then drop again. So this is a downtrend structure that you may see the market has. So this is a structure. So you can see that this is a structure. The market had a structure break telling us it's going to continue to the downside. It had another structure break. You must understand this in your trading. You got to understand this. Go and watch my video on market structure. I've done a lot of videos on market structure. So ensure you understand that the market break a structure and it's heading down. So this become a downtrend for you. You're looking at selling this market. So you'll be looking at, I'm going to sell. So this is so important because first of all, you want to understand the direction of the market. If you don't understand the direction of the market, you are guessing. It's just a gamble game. Trust me. You need to understand the direction of the market to be able to make your decision. And that is on you. You got to find out what is the market doing. Which direction is the market going? How can I position myself in the direction of the market? Now, when there is a change of structure, how would you know? It's a very simple thing. To change structure means that the market break the previous lows of a high, and then it gives you a lower structure. That's a change of structure. So when this happened, that means the previous low has been taken out, or from the uptrend to the downtrend. How would you know? There must be a break of structure to the downside. So you don't have this structure broken. And that will not tell you that the market is shifting from a bullish momentum to a bearish momentum. So now shift from buy to sell. So assuming you were looking to buy around this area, you will notice that the market would have dropped lower, probably depending on your strategy. It may have given you opportunity to get into the trade, or it may have given you no opportunity and you just leave the trade to ride until your structure is broken, and then you wait for entry to be able to sell. And this is the strategy I want to help you get. Now, there is one more pattern, which is called sideways market, all right, that the market does most of the time before it finally breaks out and continue or breaks whatever direction. This is a sideways market. This kind of market, we encourage beginners to stay away from it, except you have a very complex, not complex, at least advanced strategy. If you have an advanced strategy, you'll be able to use it to trade it. But I would prefer you to stay away from, if you're new to trading, stay away from sideways market. For example, like this is a sideways market. You stay away from this kind of market. There is no reason you should be forcing yourself into these trades because there is no direction. You see from here all the way, you see that's sideways, no direction. Everyone is up and down, but you can have, there are strategy that trade it. I have a strategy that can trade this, but for beginners, it's not advisable. Stay away because there's so many opportunities in the market. So why would you want to be struggling with this kind of move? Sometimes you may not know that the market is going to do that until it plays out, isn't it? So sometimes you see some move and you wonder, oh, the market is going to drop, and then it stays up. Like for instance, this place, we have a drop, and you'll be thinking, oh, a break of structure is here, the market is going to continue to the downside, and then it pushed higher, came back down a little bit, and then took you out on the stop loss, and then just consolidate. That's how consolidating market works. And then just stay around there and thinking, okay, the opportunity is coming. So these are the things you want to look at for. And then this is a trend. If you notice, I'm on 1 hour time frame. I can see a trend. This is a trend here. So how do I know? We can see that the market created a high here, and then it dropped. We can see that this is the push up. All right. So let me do it again so you see that. We can see that the market gave us a structure and pushed higher. So this becomes the last low. Okay. So all through this place is consolidation until this low is broken. So eventually, price consolidated. So you can see sideways market here. This is sideways market. Eventually push to break this low and then took out this low. You see that? When this low was broken on this candle, this bearish candle here, so you have even price extended even lower. So this whole drop here was to take out all of this liquidity and then eventually pull back a little bit and then continue. Now it stops by breaking this high, by heading up again. So you can see that what is done is to trend a little bit and then continue upside. So this happened. Remember I said depending on the time frame that you're on. So if you notice like early sell, you want to like get into this market to sell, you'll be looking at the last structure. That means the last low, this one here. So when the low was broken was here and there was an extension a little bit and price pulled back. Of course, you'll be concerned about this support level, and that will be your liquidity. You have to chase that liquidity, and then you'll be looking for sell your lower time frame around this level. Always understand that structure is basic. You got to understand when market is moving in structures. That's why I showed you what the high and low, how to know the break of structures in different areas. Break of structures, you got to understand it. You got to know when the market is sideways as well. Very important. So this is what I want you to know, and I want to the strategy I'm going to be explaining on us taking the trade is based on this as well. So first of all, we'll start from GU. On GU right now, the market is still pushing down. Of course, I did an analysis on this trade yesterday to my team members to expect a drop of this market. But we can continue to sell it. We will continue selling this market today. And this is exactly what I'm looking at. Now that the market has given me several break of structure, liquidity has been taken out, which is very interesting. And then the market is coming to this low. I think on my trade, I just hit TP. Yeah. The market has closed on TP. My TP has been hit on that trade. So this was my low that I was targeting on my trade. And it just closed right now on TP, which is great. So having known that, personally, I will be looking for a retracement anytime soon. So I'm waiting for price after taking out the lows, probably want to take out these lows, and then I'll wait for a reasonable pullback. But again, not all the time that the market does what it has done now. It plays around once in a while. So we're going to be looking into that. And then also we're going to be looking into selling Euro JPY using the strategy as well. We can see the price created structural break, and then we're looking at for a pullback. Also, we're going to be looking at Euro USD for sale, as you can see. Now you may say, well, this is the trade for the day. No, it's not. It's a continuation. There will be a continuation New York section. Now, some pairs will retrace on New York section, and then tomorrow they may continue. But some will be selling more today. So we're going to be looking at that. And I'll show you how to get into such trades. So we have, this is similar to GU, and we have liquidity being grabbed. So whenever market creates liquidity pool like this, always expect them to come over to take that liquidity. They will definitely come over to take it. Now we can see that there is market structure here as well on the 1 hour. We're expecting price to react at this level. So we're expecting price to come high at this level and then react. So this might be a TP area for this drop, whereby the market will start pushing back up, and then there's a structure as well that is obvious at this low. So you can see this structure here. So for that reason, I'll be anticipating that the market will drop a little bit lower and then pull back into this structure and continue to the downside. So you say, how is that? And when will that happen? It may not be today. It may be tomorrow. It may be next week. But this is exactly how you want to look at it. And you want to trade based on structure. You see what happened here. If I go to GU for a minute, you see what happened on GU, giving us that structure mindset. First, the market created a low, take out liquidity, pull back a little, and then consolidated like a form of sideways market. But we saw that a week lower to take out liquidity. So this was liquidity grab. And then took out liquidity to the upside as well. So this is where the trick is. There was a liquidity grab to the upside. And you'll be thinking, okay, is the market selling at all, or is it buying? The next move told you that the market is still a continuation of the sell. So with this impulsive move, and we have a structure here, we have a minor structure here that was broken, as you can see. That was a structure. So price wick through it and break below. And then guess what? It came back, break above it, and then there was another structure that you also recognize at the top. So that's why GU sometimes is very sensitive. You got to be careful when you trade GU. Look at what it did. So it created a top and bottom structure, and then it took the top out, then tap into this liquidity, drop massively to take out liquidity lows, and then pull back into that structure. You see what it did? It pulled back into that structure, but failed to break this high. So when you see this, know that something is about to happen. That means it's going to drop. This liquidity becomes your interest. That means they're targeting these lows. Here, they want to take out the liquidity. So immediately you see that move, I'll be thinking, okay, fine. They're coming down here to take out liquidity. So what I'm going to do, I can see an impulsive sell market. This is an announcing market that the sellers are back to continue the trend. So once I see that, I'm going to be positioning myself to trade, to catch the sell at every major pullback. So let me do a replay here so you can see how I got into this trade. Okay. On the playback, I see that price did this one. This was what I saw. Now, in seeing this, you can see that this candle is red. It's green. It closed a bit green, indecision. But we have another pullback. For me, I said, okay, fine. Since we have another pullback, I'm going to be expecting price to drop lower. I want to expect price to drop to continue the sell. So with this, I'm waiting for what price will do here. And then price close and then still there and then went higher. So what will I do? I will extend my fib. Now, price, I want to sell. I want price to sell. I want price to sell. So price just tap into structure here also. And one would be thinking, oh, they are heading to a liquidity, what do you call it, another block here. But that's not the case. That's not the case. What price has done was just to take out the liquidity that was here and then sweep higher. So for me, I'll wait for a pullback. That's pullback number one. So we have confirmation the price is starting to sell. Then what am I waiting for? I want the price to break below this structure. See, there's a structure here that he just created. There's a structure. So I want price to go below this 61, giving me an entry. So what I do normally is to go to either 30 minutes time frame or 15 minutes time frame, and I'm looking at the picture of what the market is doing. So on the 30 minutes time frame, we have price consolidating and then push higher, a little higher. So we are not in yet, and then we're still waiting for opportunity. So we see that market has given us a structure at this low and a structure there. So we're waiting, and then price push even a little bit higher. Okay, so we can see that price has tapped into 1 hour liquidity order block a little bit, but it's not in yet. It just tapped into that other block. So I go back to 15 minutes. I want to sell. All of this move, I'm not trading. I'm waiting for price to give me what I want, and I'm waiting to get in when I want to. So, and then price drop, now giving me a confirmation that the sale is about to begin. And then price broke below and then close above 61. So it's still playing around, no trade yet, no entry. So then eventually it dropped. Now, all of this, how would you get in? Let me show you. So that's why we use the 15 minutes time frame. On the 15 minutes time frame, you will see that the market is already selling. So all you want is that the market break below this. So you have that push, and there is a, okay, it's not broken yet, and then it breaks. And then it still close above it. No trade yet, and then eventually it breaks. Now, what you want to see is an entry. So question is, how do you not get into this trade? This is a sell that happened this morning. This is this morning. How would you not get into this trade? The first thing is to wait for a pullback into structure. Now, it is not going to be on 61. You're going to look at structure around here. Did you see structure? Let me show you where the structure is. Here. That's where the structure is. Did you see that? So at that level, you're waiting for price to pull back up there. Let's see if this did pull back. Price didn't pull back up there. So there was no entry on that 15 minutes. So the question is, how would you have gotten your entry on that 15 minutes if there was no entry? Now, this strategy sometimes will speed off, will take off instantly, like it did here. Liquidity took off and didn't come back. So most of the time, you will not find that pullback coming in. But you can always get an entry, like this London section here. How would you have gotten in when the market opened? You see a liquidity pullback, a little pullback, but that's not enough. It's not a good reason to get in. So what I did was to move to a higher time frame. So on a higher time frame, which is the 4 hour, I mean, it was very clear. If you check the 4 hour time frame using the same strategy, you can see that there was an impulsive move to the downside. So the market gave that impulsive move, gave one impulsive move, and gave another one. So I'm going to be looking at this one here that took out this liquidity. So if I look at that low, you see. So I'm going to be looking at price action, breaking a retest of that. So here is where I'll be thinking of selling the market. So I'll go to the 1 hour time frame. Remember, you have 4 hour, 1 hour, and 15 minutes at your disposal. So you need to learn how to maneuver those time frames. So here now we have a break yesterday. So this morning you'll be waiting for a pullback. So remember, this is 4 hour against 1 hour. 4 hour against 1 hour. 4 hour is where you're looking at the structure break, and 1 hour you're looking for entry. So at this level now, we see a break. So the market smashed all the way down, break below 61, and then you're looking for structure to get in. So first of all, we have a structure here at this level. There is a market structure here at this level. So if I was to get into this trade, I'll wait for that break. As at yesterday, I'll wait for that break. Then I will put my entry at this level. That's what I'll do. I'll put my entry here. So to put my entry here means I'm going to short up from this level. And I'll put my stop loss just above the 100% level. And that will be 11 pips. And I'm targeting minus 27. And that will give me 1, 2, 3 setup. So this will be your setup. And then as at yesterday, you didn't trade. You're waiting for price to pull back. So what did price do? Price pull back and then give you an entry. So let me just reduce the speed. Let's go back there again so you see it. So we see price pulling back and you say, my God, I'm going to get in soon. I'm going to get in. So you put your entry there. 1, and you can decide to put entry through on 61. That's also structure. And then you have 2 entries, and you are going to use a sell limit on them. You're using sell limit. So using that sell limit, what happened? Price activated your first trade and activated your second trades. So 2 trades activated right now. So now you are in a trade live. And what happened? Price play around there until this morning, price began to drop. So at this level, you know price is going to take out this liquidity anyways. So what happens? Your TP is smashed. The question is, how was this trade taken? How did we decide to take this trade? It's very simple. I'll remove everything here again. I'll go to the 4-hour time frame. I'm looking for structures. I'm looking for structures because that is what I'm looking for to trade. So the first thing I see on the structure is this. We can see that this is a massive pull drop that just happened, massive drop. So the market drop took out liquidity. So we are selling on the 4-hour. 4-hour is bearish. That's the picture. So as long as 4-hour is bearish, I'm going to be looking for opportunity to sell on that 4-hour. So every structure is very important. For instance, like this is a structure here. Did you notice that this is a structure? So if I was to take this trade, although it wasn't a good pullback, but if I was to take this trade, I will look at it as oh, I'm going to sell. I'm going to be selling GU now because I can see structure break, a little pullback, and then this is an order block. So 2 things you can do, either to use this as an entry, order block for your entry to sell it, or you wait for a structure. So let me tell you what I mean by that. I need another green candle to confirm a pullback on this 4-hour. Remember, this is 4-hour. So I need another green candle. And this happens to be red. So I thought, oh, I just missed that entry. No, you didn't. And then price drop again and then consolidated. So at this time, you're not trading. You're waiting for a reasonable pullback. And guess what happened? Market is now pulling into that structure. It's pulling into the zone, which is the order block. That's number 1. Number 2, I can decide to have a fib on it like this, so that I wait for price to break and then retest and I'll get in. So let's see what happened. Price push higher. Again, telling us that the order block is still an interest. And then what happened? Price drop and then push a little bit higher to tap into that order block. So I might sell from there if I want to, but I'm not just trading that. I want price to let that order block is a confirmation for me that price is rejecting it and is going to sell and then confirming my strategy. So what happened? Price pushed into the order block now and it activated. So you can see that that primary, secondary order block was activated. So that means I'm about to sell. For me, I'm getting ready to sell this market. That's the way I'm thinking. I'm getting ready now. So, but that's already a sell market. Yes, but it's still more opportunity for me. I need a clearer confirmation. That is just structural retest and then it's coming down. So the next thing is a confirmation. You see that? A break of 61. So at that level, I'll go to 1-hour time frame. And by 1-hour time frame, I already saw a break of 61. You see, I already saw a break there. So that would be my entry. I can enter on this trade right here. But one thing is certain is that there is another structure here. There is a lot of structure here. So let's assume I was able to get into the trade on this short by shorting there. And my stop loss is at this swing high, which is 37 pips. So the question would be, if I come down here, will I get 1 to 3? No. It won't give me 1 to 3. So how do I now get that? So I will look at structure. So I will wait for price to pull into the structure. That will give me 1 to 3 into the structure. So that will be my entry 1. And my second entry will be, I will have 1 entry here and I will have another entry here. That will give me 2 entries. So that will be a buy, a sell limit order. So this one is already activated. I'm waiting for the first one to be activated. So let's see if it did activate. Price drop a little bit, pull back, and then what happened? Activated. So I'm still in the trade. This is a lot of like you're taking him into the second day trade. So, and what happened? Price drop right now. So at the moment, I will still be in a trade. You just see the two methods I've used. Number one, this took longer and it's still going to take longer for price to get here. So in other words, price would drop, will still break all these lows and come all the way here. But I'm still in profit. So that is about how many days? That is to tell you between my entry, which was here, to this particular time is 2 days. So that means you're looking at a 2 days period to have been in this trade. So now, if price break below this, which is 38, this is your opportunity to break even. So now you move your entry, your trade to entry and break even. So now you are trading you're trading now risk-free. So you know that price will not, because price has broken below 38, you're taking it risk-free. So you can now leave your trade to just play out and then hit your TP. That is another way you can trade this. So I've talked about two ways you can look at it, early or short. So here is another opportunity for you to have gotten into this trade as well, using that strategy of structure. Like I said, immediately you saw this push yesterday, and then price started doing this. This is what you saw. If you saw this, this is a structure for you. Why? Because the overall trend, downtrend, is this one. So all of this is our correction, the out correction. So you have the first one, and this one failed. That would have taken you out because the other block need to be activated. And then that one would have taken, if you were in this trade, let's say you got it in here, I'll be skeptical about it because of the week, this massive week left behind. All right. So even though I'm going to sell this market with this drop, I would think, okay, this week here that is here, I need to think about it. I need to really think about it. Should I go in on that week? So the best opportunity would be, what is the 4-hour saying? So if the 4-hour is saying this, then I'm not going to trade it. So I watch for 4 hours to give me confirmation of a sell. And then that is the 4-hour sell. So once the 4-hour sell happens, I'll go to the daily, and now I can see it. I can go to 1 hour time frame, then I can see a structure. So now I see a structure. So okay, great. And I'm going to use this structure. So I will put my fib on there, and I'll say I'm going to look for continuation to the downside. And that's what you look for, continuation to the downside. So as long as price is still doing that, you are not selling. You wait until it's done. You're not buying, you're selling. So whatever push-up is doing is none of your business until price give you opportunity to get in. So here you are still extending to wait for a confirmation. And what happened? Price dropped below there a little bit. And then one more time, it went down. Now, you will miss this, or if you stay on the 1 hour day just to say, okay, I want to get in. No, you have to go to your entry time frame to get in. You go to your entry time frame to get in. Very important. You have to move to your entry time frame to get in. Now, the reason price, I told you before, that price didn't pull back up here is because of the liquidity that need to be dropped. This liquidity was taken. So you need to understand it. It's not difficult. It's a very simple strategy, but you need to plan how you get into the trade. Very important. And let's go back to the 4 hour a little bit. Let's say you're using this 4 hour right now. That is just be traded. All right. This is what you're using now for a trade. So at this moment, how would you wait for a reasonable trade opportunity? As you can see on GU, this is a breakout structure. It's tapping into this liquidity, and it's going to continue to the downside eventually. So how will you get into the trade? Remember, I said this was your first sign to get in. The first sign to get into this sell was this one. this one here. But if you go to the 1 hour time frame, let's say we're using this fib to continue the sell, and then it went higher. If you go to the 1 hour time frame, you will see that it's already broken. Did you see that? So we have a break to the downside. So you will not have to wait for structure to tap in. So this will be your entry zone where you short from 61. That zone. And then your stop loss is right there. And then you can target this low, which obviously it looks lower, but that's what you would do. So at that moment, you might stretch it to say, okay, well, I'll target 61 for 1 to 2, a minimum. And then the market tag you in on the sell, as you can see. Tag you in, you're in, and then price will take you out. Why? Because early entries. So the stop loss had to, the other block was tapped into. So then what happened? Price came back down, break again the second time. So this will give you the second entry, because there are a lot of people that see differently. Some of you will have difficulty in identifying this kind of structure. But look at that, the second one. So this second one came back, give you what we call second entry. So now you have the second opportunity to have sold at this level. So you still have opportunity to sell from there. Remember, you were targeting structure. Let's say you entered there because that was your structure. And then you're targeting this low or this low. That will give you 1 to 2 a minimum. So let's say you're targeting this level, and that will give you an entry and price hit TP, and now you're out. So this is exactly how you want to trade the strategy. So let me show you other pairs that we're looking at to trade. So GU is already done for the week, for the day. Hopefully there's a pullback that will happen on the New York section. And the same thing here. This is exactly how I will trade this particular one. We have a drop, and all I needed to do is see a correction. Now on this correction, let's say we go to a 4 hour time frame. This is the drop. See that? That's the drop you see. So with that drop you see, what are you looking for? Correction. So I see a drop, now I see a correction. So let me just show you what I mean. Immediately you see this is a setup. This one is a beautiful setup. This is a beautiful setup for the strategy. So you're looking for price. All right. I'm looking for price to come low. So let's see. And price did that. Let's go to the 1 hour time frame and see. So on the 1 hour time frame, we see that price pull back up, and we have a stop there, and then we want to see price break low again, and then price extended a little bit. So what happened? And we have a break below 61. So there is my entry. So I'm gonna wait for price to tag me in on the sell. On the sell right there. So my stop loss is right at the top. You can see this is 1 hour entry, and I'll be targeting 61. So I can literally have a little bit of structure there just to have 1 to 3. So price tag me in, as you can see. I'm in the trade. And then what did price do? Drop. TP smash. Simple as that. So you might be thinking, well, it doesn't happen like that all the time. It does, depending on what you're looking at. And that's what I'm showing you the strategy. Depending on what you're looking at, if you have an impulsive move, all you need to do is to wait for price to break, give you a structure break, and then allow price to give you, announce himself that it's going to sell, and you'll have that entry. So let's look at another one. How about this one too? How about this drop that is just happening on this trade? The first thing is to go to the 4-hour and see what the market did. So we have, obviously, market created secondary order block based on structure and dropped, and then pull back into that secondary order block, and then we have another minor sell that happened there. So here would be my structure, this one. So I'll take this structure here as what I'm looking for. So when price start pushing back on retracement, I will use this high. So here now would be my entry, because I see price break on 41 and 4-hour time frame, price break. I'll go to 1-hour time frame to wait for price to tap into the structure on 61. So I have a structure there on 61 that is obvious, and I want price to come over there. So I may have it around here. So I'm going to click a short right there or right here. Put my stop loss on that level, which is around 88 or so. Sorry. Put my stop loss there, and now we'll target this area. Now, that may not be 1 to 3, but I can decide to say, okay, you know what? Let's see. I will just target that zone. That'll give me 1 to 3. Now, with this in mind, I'm waiting for price to come into my entry. 1, okay, probably entry 2, depending. And then price tag me in entry 1. I didn't think it got to entry 2. We have 2 entry there. 1 is executed, and then price drop. Right now, this is where we are at on this trade. So where is it going? It's going to get all the way down. It's going to get all the way down to 61 before we have price retracing. Now, this is again another pair. How would you have gotten into this trade? How would you have gotten into this trade? Again, you go to your 4-hour time frame. What do you see? We see break of structure. Again, break of structure right there. Price drop, took out this low, structure low. So when you start seeing a pullback of this nature, you're going to be using this as your entry criteria. So with that, you wait for another confirmation, which is that one. So this is where you now eventually say, you know what, I'm looking to sell this market. So what, you go to 1-hour time frame, and then you're waiting for that opportunity to sell it. You got to choose what direction you're going to. A lot of people like to buy and sell at the same time. That's not how you trade. Know the direction of the market and trade it. All right. So the next thing we see is the price started dropping, and then we have a break. So now we have a break. I'm going to have, you can see just a plain trade. So there was no structure there on 1 hour. So if I go to 30 minutes, do we have a structure? So on the 30 minutes, you would have already gotten into the trade if you were using 30 minutes on the time frame. So let's see if price came back up there. Yes, it did. So if you go to the 1 hour, we see price pull back into that area. And then what happened? Enter you as a sell. Obviously, you can see tag into that stop loss, because the break that you saw, let's say you were using that play as a stop loss, it just tagged you in. So the stop loss is hit. So what happened? price is still valid, and then it went higher. So you're looking for opportunity. This is still daily, 1 hour time frame. You're still looking for opportunity. You just got taken out on one, and then you're waiting for the next one. So what is you doing? Price started dropping. So now price break again the second time. So at this level now, you're going to get in because it's already exhausted its buys. So I'm going to get in. I'm going to use this structure. You see this inside bar here? I'm going to use that structure as my entry, and I will target this low. So once my entry, okay, this one now couldn't get into the entry. It couldn't get there. It failed. It failed to tap into the entry. So you can see that it failed to get in. So that's to show you that not all of them will eventually pull back into that zone and give you an entry. But you can see that it failed. So if you have gotten in here, probably here would have been your stop loss. But normally we will not trade. We will not ask you to do that because you're actually trading using the retracement. You're trading the retracement. You want to position yourself for the retracement. So you probably would have missed this. Or another way you'd have gotten into the trade is to target the structure low, this place here, that under the low of it, and then put your stop loss right there at the high or at 88, something like that. And then you would have still been in the trade, able to get in. So you just have to know on your back testing, you just have to know which one works best. Immediately you find on the 1 hour price break below and close below it, within that area, get in. You can do market execution if you want, or you wait for price, to give you an entry that you may take. So not all pair we do exact same thing, but some will respond to that. So let's see this pair on the 4 hour. So on the 4 hour, we have a drop, this impulsive move here. So we have this impulsive move as well, but there was an inside bar. So this is very trickish, but you see a sell opportunity. So you just have to be more careful when you are trading the pullback. So overall, this is a pullback on this trade. So we have a break on the 1 hour. We have a break there and a retest. We have price break and retest. So this would have been your short opportunity, and it tag you in, and you're targeting this low, and your stop loss is here. Remember, you could target 61. So this would have been your entry on this trade. And then what happened? Price played around for a while, and it's still doing that, and eventually began to drop. As long as you have your structure in place, there's no need to worry. And you can see price almost hits TP at this moment. So this is how you would have been able to catch those trades. So do your back test, play around it. I've just showed you what to do. Watch this video again. This is free information for everyone on the web who wants to learn how to trade. It's one of my strategy. I want you to go practice it, learn, and tell me what you think. All right, let's take some questions. If you do have a question. So at the moment, there is no trace. Trace setup is getting ready, but we need a retracement, and then we'll be able to cancel. Oh, beautiful. So this is the first trade we might be looking at today. So that is GDP New Zealand and also GDP AUD. Those are the two pairs we'll be looking at to trade in your section today. So what we need to do is to get ready to see when this candle, in the next 1 hour, we need to see a break of that candle. So I'm looking at I'm looking at the closure of this 1 hour before any decision. Don't get in under 15 minutes. It's going to play on you. So you have to wait for price to break. Give you that entry on the 1 hour. And the moment it's just starting. So this one is not too strong at the moment. So we need another bearish candle. So it's not ready. This one, the same thing, is not ready. We need another bearish candle. So two of them, they look bullish, but for us to continue to buy, we need them to pull back a little bit. All right. So I thought, yes, this is nice on GU right now, playing out. So we're waiting 2 more candles. So it's still 10 o'clock in the morning. So by 12, we should have a clean setup for a beautiful sell. So hopefully I'm gonna go live by 12 o'clock or 1 o'clock later today, and then we'll be trading live for those of you who. Otherwise, I will encourage you to join the trading lab. I'm gonna be sending in the analysis of my setup on the trading lab. So if you are not there, check the link in my description box. You will see how to get into the trading lab. So let me just show you what you need to do. So you can go in there. This is a trading lab that you see. Once you get there, you come into the daily trade analysis here. So once you get access, it will add you up to the Telegram group instantly. It will ask you to join the Telegram group, and you will start receiving the analysis today if you are interested in it. So that will cost you that every month, and it's a chicken change. Trust me, because you're going to be getting trade analysis every day of the week. So you definitely make more than that in a whole week. So that's certain if you trade wisely. And also you have opportunity to join my mentorship classes Monday and Wednesday. So that's a good thing. And also you can take the course. You can take the course for free and watch it. What I just shared with you is inside the course. I have 3 major strategy that I talked about in the course. So I just shared one with you now for free, everyone. So the rest 2 strategy is still in the course. You can take that course as well if you want to. And I have a free course for you. For those of you beginners who know about trading, take the free course. It's free. All right. Learn about how we trade. But the strategy here on this course is not the same here. No. So this is an advanced strategy, a well professional approach in the market. So this course, the free one, is the basic understanding of trading and how to begin to understand the chart and how to trade the high and low of the week and all of that. But we moved past that level long time ago. So we're trading now advanced strategy, looking at market structure in deep detail. So that's what it's all about. And then that's what you do. So get in there and sign up, and I'll see you in the Telegram group or in the trading lab. So on GU right now is warming up. We're going to wait for price to give us opportunity before we get into the trade. And that's what we're looking at. There's a week there. We have that one there playing out. That one is not done yet. That one is beginning to start. That one. So we had, let me just remove the drawing. So any question, guys? We'll have a question, let me know. Those of you on Facebook, watching YouTube, is there any question? Any question? Yeah, it's not ready. We caught this US 30 yesterday. This strategy is similar to supply and demand. No, it's not. Supply and demand is in every strategy. Trust me. If you trade high and low, if you trade, the trend line, trending market, if you trade trending market, then you are looking at similar to supply and demand. But every trending market is based on supply and demand anyway. So yesterday we caught this beautiful setup. We had a bullish momentum there. So there was a bullish momentum, market break structure, break this high, liquidity grab, and then we're waiting for this retracement to play out and this candle print, and then we started looking for buy. And all you needed to do was to wait for a break above, which it just did. And on the 15 minutes, you're going to get in. So we see that entry there on the 15 minutes right there. Where is it? On a buy. You see that this structure here? That's where you get in. Because it left us a structure. So you want to get in on that structure. Put your stop loss at that low. And you are targeting this high. Now remember, this is US 30. So US 30, you can make some reasonable money from US 30 if you know what you're doing. So 1 to 1 or even 2% of US 30 is something. So trade came back again and tapped into it. And then came back again and then eventually rally up. Wow, look at that. Look at that, guys. US 30 smash yesterday, actually. I mean, this is not a, of course, let me show you the setup. I think I sent the analysis yesterday. Look at that. US 30 trade setup, risk management can afford to lose, risk what you can afford to lose. So that was the setup in the trading lab. You see that? US 30. And obviously this was a higher time frame setup. So it was sending, and on the Telegram, sharing it. On the Telegram, it's also sent there. So that's US 30. But at the moment, what are we looking at? US 30 is consolidating. So it's not in a consolidation phase, which is not a reasonable pullback for me. So it's still continuing, but you know how US 30 behave. So at the moment, I'm not trading US 30, no reasonable setup until I see a reasonable pullback. This is not reasonable enough. And this is tricky, very tricky. So that's consolidation there. But once you see this, you see pullback like this, beautiful. You're getting in. Okay. I think we're having a setup on GJ. There's a setup playing out on GJ right now. Let's put it up there. GJ setup. No trade here. Again, we have CAD JPY playing out as well. So there's a lot of trade opportunity this period. So you better sit close. All right, guys, that's it for the stream. I hope you guys learned something. I don't want the video to be too long. Watch it again and again. And hopefully I'll come back live on when I know the market is ready to give us opportunity to trade. and then we'll be able to look at the trades. But for now, I'll see you by New York section. All right, get to see your New York section today, because the last trading day of the week for me, I feel we'll be able to get some opportunity, help you catch some trades as well. I've already made some trading this morning, but we can do more. All right, thanks guys. Remember, keep trading and risk what you can afford to lose. Bye for now.